Welcome to Good for Bitcoin, a weekly show recorded live every Friday, where we recap the top events of the week and talk about everything that is good for Bitcoin. If it's built on Bitcoin, then it's good for Bitcoin. Let's get started.
Content shared on this podcast is for informational and entertainment purposes only. It does not constitute financial, investment, or legal advice. The views and opinions expressed are those of the host and guests and do not reflect the official policy or position of any other agency, organization, or company. We encourage you to conduct your own research and consult with a qualified professional before making any financial decisions.
Well, hello, everybody, and welcome to Good for Bitcoin. My name is Brandon, social media manager here at Trust Machines, joined by my co-host, Kate, community manager. Kate, happy Friday.
Happy Friday, Brandon.
And yeah, we have a lot to get into. As always, another productive and busy week in Bitcoin. First off, feels like a long week. Way back on Monday, we officially launched or announced Granite's Zealy, which is super exciting. If you have not seen the news, Granite has its own official Zealy. We're sort of getting ready for this really big ecosystem-wide. I think we gave a little bit of alpha on last week's show, but we officially announced it to the public on our Twitter on Monday. So really exciting to see that get launched. And we can get into all the news, but how was your week?
It has been a busy one. It's funny how the weeks go. Last week, we had a short show. There wasn't a ton of news. And this week it was like, bam, there's everything. But I'm quite excited for Granite to be open basically to more people. We were pretty excited. We got some feedback from a kind of like Stacks OG saying such a great user experience. Like it's exceptionally clean and beautiful. So it's really cool to get some feedback like that on what we've been building. And yeah, it'll just be great to have it out there and in more people's hands and obviously getting more feedback and be able to do some fun stuff with that, especially through Zealy.
Yep. A lot to look forward to there really soon. Well, we always tend to start the show talking about public company news. We have a lot of public company news this week. Majority of the news, I would say, is public company news. We can start with, of course, Strategy buying more Bitcoin. They bought 6,556 more BTC. They now have a total of 538,200 BTC. Semler Scientific also added another 111 BTC, and they now hold 3,303 BTC. Public companies continue to stack Bitcoin.
Pretty cool. I'm excited to get into this next one. I know that you're very excited to talk about this. So let's do it. What's up with 21?
Yeah, big news. So those that have been in Bitcoin for a while are probably familiar with Jack Mallers. He's the CEO of Strike. They probably most famously helped El Salvador roll out their support for Bitcoin a few years ago. I remember listening to that presentation live when Jack went on stage with Bukele and they announced this huge, at the time it was huge, right? I just remember a few years ago, the fact that this was the first nation state that was adopting Bitcoin and what a huge deal that was. And since then, maybe it hasn't been quite as impactful, but they were still the first. So it was really cool. And, since then he's been kind of the CEO of Strike, growing that internationally. I think Strike has really dominated this, payments internationally, remittances as well. That was something that they were really targeting, over places like what's the Western Union and the other places that charge so much in fees to do remittances. So a really great sort of replacement for that. But yeah, basically this week it was announced that Jack is now going to be CEO of this new company that is being launched. Kind of a lot of people are launching it or helping to launch it. It's basically Tether is on board. Jack is going to be CEO, and it's going to be called 21. It's this Bitcoin native company, and they're also launching it in partnership with Cantor Fitzgerald. Howard Lutnick was the CEO of Cantor Fitzgerald. Howard Lutnick is currently the U.S. Secretary of Commerce, and Cantor Fitzgerald has also been the primary custodian of Tether for years. They've been the primary sort of quote unquote bank for Tether. So they've also been sort of tightly connected, and SoftBank, I guess, is also a minority partner. And then Cantor specifically partnered with them on the SPAC side. So they are going public via SPAC. And yeah, there's a lot to get into here. So with this news, they're basically trying to take on a few things. They're trying to take on ETFs. They're also trying to take on Strategy as well, with being sort of just a Bitcoin native company. Strategy, has been around for a long time. They obviously did not start as a Bitcoin company, even though we kind of always associate a Strategy with Bitcoin at this point, but they're sort of a business analytics company. And they still are a business analytics company. They still have that as sort of their operating business, but then they do just all this Bitcoin stuff. So 21 is almost like if you took Strategy and you stripped out this weird kind of business analytics thing that doesn't really make sense in the Bitcoin strategy and just tried to solely focus on Bitcoin. What's really interesting is they're optimizing for these two key metrics that they talked about. So the first one is BPS, is Bitcoin per share. And the second one is the BRR, which is the Bitcoin return rate. Bitcoin per share is the amount of Bitcoin that each share of this company represents, basically reflecting the shareholder ownership in Bitcoin rather than fiat earnings per share, which is what most other companies focus on. And then the Bitcoin return rate is the rate at which that Bitcoin per share grows over time. And what they really want to emphasize is that these metrics they're weighted on like a Bitcoin scale, right? It's not weighted on like a fiat scale. So if the price of Bitcoin goes up, that doesn't really impact these numbers at all. It's truly, they are like looking to stack and acquire more Bitcoin and looking for different methods to do that. So as they look at kind of launching this company, they're expected to launch with over 42,000 BTC. I don't actually know if they've made that purchase yet or if they're still going through things. We have seen Bitcoin go up a little bit this week. I don't know if it's because there's been a large purchase of 42,000 BTC or not. I guess we'll see. But so they're positioning it for a few different ways, like I mentioned. So against ETFs, they're saying that if you purchase Bitcoin in an ETF, the amount of BTC that you hold sort of remains constant. Where if you purchase a share of XXI, which is what their ticker symbol is going to be for 21, the amount of Bitcoin represented per share will grow over time. That's sort of like their selling point for buying it over an ETF. I don't actually love that positioning over an ETF because I think in something like an ETF, I think you have just a lot more safeguards in terms of like how the underlying kind of custody is managed. There's a lot more kind of legal stuff that kind of goes over my head with it, but I think you're a lot more protected, I think, when it comes to holding assets in something like an ETF versus holding this in like a kind of like a holding company, I guess.
So it's kind of like you're getting exposure to the asset itself plus like additional gains of the shares.
So yeah, what they're sort of advertising is they're going to be sort of actively managing this Bitcoin and actively looking for ways to continue to grow this amount. And as they continue to grow the amount of Bitcoin in their treasury, that Bitcoin per share will increase. The idea is that, versus what they say is that, if you just buy Bitcoin, right? You buy one Bitcoin, you own one Bitcoin. If you buy this XXI, the amount, that share sort of corresponds to on a Bitcoin level might like go up over time. But this is where it gets tricky, right? Because like we want to incentivize people to buy native Bitcoin.
Yeah.
And I guess like, is this better than buying an ETF? Is this better than buying like Strategy? Maybe. I don't know. I did actually end up buying some, I guess, like full disclosure. I think like these three, like, between Strike and Tether and like Cantor, like I think these are three like powerhouses. And I think just personally, like, they're going to do well. And they're going to find some unique, cool ways to, potentially acquire more Bitcoin. But yeah, it's hard to say. I mean, I wouldn't necessarily buy this over, just buying Bitcoin, right? I bought some because I had like some money in like a 401k. So I just like moved it around and purchased some in a 401k. But if I had like some money on the shelf on the table and I wanted to like buy this or buy Bitcoin, I mean, buy Bitcoin, right? We want on-chain Bitcoin at the end of the day.
Yeah. It'll be a
How
fun
do you feel about
experiment.
it?
I think it's pretty cool to see like a company built from day one using like the ethos of Bitcoin, and like that is their mission statement. And again, you have these like powerhouse companies that are all coming together. So like I don't see how this is going to be a bad thing. I don't know. I think just as a Bitcoiner, it's always just, in my opinion, better to purchase the real thing. But I like how you branched out, you're diversifying. Yeah. And I think it's going to be pretty cool. And I think if anything, there's going to be some like amazing content, education, media that could come from this, and yeah, hopefully reaches more people. So this is going to be pretty cool. I'm really interested to hear your prediction. I know you have a big one here.
Yeah, well, so Jack released a couple of videos where he was talking about this. He sort of released a video, one for like 21 and like the 21 audience, and then another for Strike and like the Strike audience. And he's not leaving Strike. He's remaining the CEO of Strike. But in the 21 video, he talked about how 21 was going to be a financial services company. And it just seems like there's so much overlap. If you're trying to be a financial services company, that sounds like what Strike is trying to do, honestly. Yeah. They talked a lot about, how 21 was also going to just be really focused on, he had this quote. He said, Strike is full. Yeah. Breathe.
Yeah.
In this video for Strike, he said that Strike is focused solely on Bitcoin financial services, where 21 is focused on being the vehicle for capital markets to participate in Bitcoin. And he said that he will lead both, and he doesn't plan on that changing anytime soon. So Jack will be the CEO of both companies. But in the first video, when he was addressing 21, he also called 21 a financial services company. And then in another video, he said that Strike is focused solely on Bitcoin financial services. So I think that it would make sense for these companies to eventually merge. I don't know if that's the plan, but I just feel like there's just so much crossover and so much overlap between these companies. Tether is now headquartered. I think their main headquarters is now in El Salvador as well.
Wow.
So, they're close, in El Salvador, along with, Strike. I feel like there's so much overlap now going to be between these two companies. Also, Strike, along with these announcements, Strike shared their own financials for the first time. And this is something that you typically do when you are trying to go public, as you, as a private company, begin to share some of these financials. So it just feels like they're leading up to like a merger of some kind or something in the future, or at least, keeping the option open. He never specifically said that they were not going to do it. He just said that he was going to continue to lead both companies. So I think the path is definitely open for that to happen in the future.
And naturally, it just kind of makes sense that it would go that way.
Yeah, totally. Yeah. So Strike shared some of their financials for the first times. 2024 volume, over $6 billion, year over year growth, 600%, gross profit margin, 85%.
Crazy.
Customer acquisition cost, $0. They basically spend no money on marketing. Just crazy numbers, insane. And then their profitability statement, they said they expect to generate 8 to 9 figures of net profit in 2025 with just 75 full-time employees. So Strike is just doing some crazy stuff. Like, that's a crazy amount of growth and profit margin and everything. Yeah. With such a small amount of employees as well.
It might really be Tether at some point.
Yeah, I was just going to say, like, it really mirrors, what Tether is doing as well, right? They are generating so much profit from, when they mint Tether, when they mint USD, they're holding actual dollars, or dollar equivalents like bonds on their balance sheet, and they're earning interest off of all those holdings. So Tether is incredibly profitable. They have also a very small amount of employees. And the fact that these two companies are sort of coming together to find strategies to acquire Bitcoin, it just, to me, like, it's very exciting. It makes a lot of sense that they would be effective at doing that because, Tether and Strike have both been effective at doing that themselves. So now that they're combining together, it's a pretty big deal. They also mentioned that they're going to be rolling out collateralized lending products in the very near future. There was actually just a post from Jack I saw today where he mentioned that was coming in days. So we might even see that come like next week. I do think that that's going to not be DeFi. So that's another thing where it's like, it's really cool. Strike is growing. They're a Bitcoin company. They hold a lot of Bitcoin on their balance sheet. They're, focused on education, but they are still CeFi. You can withdraw and send stuff to people, send Bitcoin to people on chain if you want to. But if you're just using Strike itself and you're holding it in like a Strike wallet and you're sending to other Strike users, I'm pretty sure that's just, well, it's all CeFi that you're using. It's like good, but like, yeah, you know, obviously we would prefer everything to be on chain. There's challenges with that too, right? I mean, you can't have everything DeFi because like on ramps, for example, right? That's kind of what Strike is doing. So
it's good to have like a balance of both, right? Like a lot of times with CeFi, you're getting really clean, amazing user experience, support, kind of like helping you through it. But at the end of the day, it's really no different than traditional finance if you're needing to trust someone. So it's good to have like be able to use both, come in and out of like being on chain. So yeah.
Yeah, the lending products is interesting. I mean, you have to imagine that they're going to be collaborating with Tether in some way, right? Because you're, you know, collateralizing a loan maybe with Bitcoin and then you're receiving stable coins in return. So they have to be integrating, you know, USD in there somewhere or a USD equivalent. So yeah, I guess we'll see what happens. Maybe we'll be covering that in a week or two once they finally announce it. But they've been teasing it for some time now. And yeah, again, it's certainly just when you look at 21 claiming that they want to be a financial services company, these types of products make total sense to be under a financial services company. So yeah, we will see if they end up merging. Stay tuned, I guess. That's my prediction, at least.
Yeah, but that was huge. That was a huge announcement this week. So.
Yeah, big news. Jack's just very well known, I think, Bitcoiner in the space. So pretty big news to have. Also, just so much money, you know, coming into, you know, like SoftBank, for example, getting involved in this, and Tether obviously having so much money, Cantor Fitzgerald having so much money. There's just a lot of institutional interest that I think this is going to generate. So pretty cool stuff. Yeah, moving on. Got a lot more to talk about. Wanted to send our congrats to Hermetica for the launch of Hermetica 2.0. I can try to share screen and show their announcement, their nice looking UI that they have now.
I absolutely love that. Anything that makes it easier and more seamless to interact with being on chain is such a win.
Yeah, the one thing that's really nice is they launched this transparency dashboard, which gives you, that kind of live view of the system that's backing USDH. So you can see, you know, in real time, which is also very cool. Just, how, you know, who's custodying the USDH, you know, where is the supply, what is the price? And also you can track in real time their APYs as well. And, you know, how those are going up or down over time, kind of based on kind of market dynamics. So really cool stuff. You know, they say especially this is like kind of positioning it more for like institutions to get more comfortable with these types of products. Obviously, they need to see this type of data, and having it be real time is really, really cool. So yeah, shout out to Hermetica and USDH. Pretty neat.
All right, let's get into the US government.
We always do on the show. So the Federal Reserve Board announced the withdrawal of guidance for banks related to their crypto asset and dollar token activities and related changes to its expectations for these activities. Basically, what that means is they released this press release that kind of withdraws 2 letters that they had previously put out over the past couple of years. So there was this 22 letter that established an expectation that state member banks would provide advanced notification if they planned to do these types of crypto asset activities. Basically, by kind of having these types of requirements, it just produced more friction, right? It produced more friction for banks to engage in crypto stuff. And so much friction that basically they just didn't do it. Like banks didn't want to get involved. It was sort of these types of letters and rules are what really reinforced this like Operation Choke Point 2.0 from like, you know, debanking crypto companies, making it so that banks didn't really want to touch crypto or want to work with crypto because these sort of frictions were in place. Another 2023 one regarding the supervisory non-objection process for state member bank engagement in dollar token activities, which basically made it so banks couldn't engage with stablecoins at all. Basically, this meant that the banks would have to ask permission from the Fed to not object to their actions. But again, it was kind of in practice effectively a ban. So those two letters have basically been withdrawn with this new guidance, which is really great. I did see a tweet yesterday from Custodia Bank CEO Caitlin Long, who did mention that there, I guess, was another crypto themed sort of letter that has not yet been rescinded. Her sort of TLDR was, because this one other letter still exists, it means there's sort of a disconnect between federal regulated banks versus like OCC or FDIC regulated banks. So certain banks might be able to get into these activities. Certain banks might still not be able to. But she did say that, I guess, the stablecoin law that's currently sort of in progress in the government, in the federal government, is when it does go into effect, would sort of resolve this issue. So maybe it wasn't rescinded just because they think that it's going to go into law and they don't really need to address it. But there's at least a little bit of friction still out there, but still a really great progress on, having banks and being able to do crypto stuff, which they want to do, but they just haven't been able to do because of a lot of these issues.
Yeah. It'll be really interesting to see, like, stablecoins have been such a use case for crypto. So with a lot of this like guidance and clarity, it'll be interesting to see how much bigger it could get. I think there really is no limit with that. It really is such a great use case, and that's like what people around the world are using it for. And so getting, banks and larger institutions in on it just expands that so much.
Yeah, I mean, imagine banks using stablecoins, right? That'd be like amazing. Like when you look at how the bank system currently works, if you want to do like a ACH transfer, right? It takes like days, wire transfers, like you have to pay a crazy amount of money for. It's such a mess. So like if they just use stablecoins, you have like instant settlement 24 hours a day. That would certainly be an improvement. And it would be, just also more transparent. Like it would just be a lot better.
All right.
In some more, more government news, we can officially say, well, I mean, Gary Gensler's been gone for a while, but his replacement has officially been sworn in. Do you want to talk about this one?
Yeah, so Paul Adkins sworn in earlier this week. He's the new SEC chairman. And it's just a win for crypto. It's a huge change. He says his top priority of his chairmanship will be to provide a firm regulatory foundation for digital assets through a rational, coherent, and principled approach. That's all we need. That's
all you want. Yeah, so bye-bye, Gary Gensler. We won't miss you. And hopefully Paul Atkins does a little bit better.
Yeah, I hope Gary has a great retirement.
Yeah. Yeah, so we also have a lot of Stacks news to get into as well, which is super exciting. First one, which is huge, is BitGo officially integrating sBTC. BitGo is an institutional custodian. I think one of the biggest, if not the biggest. Maybe Coinbase is the biggest. I don't know. But BitGo is up there, definitely. And they've been around for quite some time now. So BitGo has launched official support for sBTC. They already supported Stacks. They were also actually a signer as well for sBTC. So now they are just kind of doubling down their support for Stacks to help activate this Bitcoin economy. So the blog post I thought was really interesting that they posted, because it gives a little insight into how Stacks and sBTC is being discussed with institutions, since they have such an institution base, a user base. So I took out a couple quotes from their blog posts, and they said, unlike traditional wrapped assets, sBTC is governed by smart contracts and a decentralized network of validators, eliminating the need for a centralized custodian. They went on to say, sBTC leverages Stacks' native BTC yielding consensus mechanism, proof of transfer, to reward sBTC holders with a base yield paid out in sBTC. While other protocols incentivize activity with points and the promise of altcoins, Stacks offers a unique Bitcoin in, Bitcoin out model that is drawing interest from many institutional Bitcoin investors. I thought that one in particular was really cool.
Yeah.
It's really showcasing like how unique Stacks is in terms of offering like native BTC, the ability to soon withdraw, natively. You can do things like stacking, right, where you earn native BTC. It's really the only kind of Bitcoin layer that is doing that, versus just offering like, obviously Stacks has STX, which has also been performing pretty well this week, but you don't, in the future, I think you won't even need to have like STX. You can just do things with Bitcoin natively, which is really, really cool. It's going to open up a lot of doors.
Yeah, this is such an unlock. Just because, obviously us in the ecosystem, we talk about it, but like it offers so much more credibility when such a huge player like this comes in and is like, simplifies it, makes it legit, and makes it easy for people to get involved. Like this is just such an
Yeah. There's this quote from one of their project managers, Abhishek Singh, who said, sBTC opens the door to programmable, decentralized financial products without compromising Bitcoin's core principles. And we're just getting started. So pretty strong quote. And yeah, that's pretty cool.
Huge.
So more institutions getting on board with sBTC. We'd love to see it. And yeah, on that note, sBTC withdrawals are planned still for April 30th. So we will next week see sBTC withdrawals go live, which is also really cool.
Very cool.
Yep. And yeah, news this morning. You added this one in here, but I'll maybe throw it to you and you can talk about how STX has been doing this week.
Yeah, this one was pretty cool. I think this got everyone in the ecosystem pretty hyped up. So Stacks was it last week or this week? I'm actually not sure which week it was, but it was the top for best performing
this week.
Okay. So
yeah.
It was the best performing cryptocurrency in the top 100 by market value. So yeah, and there was this great article in CoinDesk that kind of goes over it, but it's pretty exciting. They mention BitGo is integrating sBTC, and so that enhances a lot of institutional access. But then it talks about how there's been quite a bit of increase in liquidity and a lot of stablecoin usage. So I think in early January, there was about $1 million worth of liquidity, and now there's about 7 million. So pretty big numbers, and that's pretty exciting, and a lot of stablecoin activity is happening. So thanks to Hermetica.
Yeah, a lot of growth from USDH. Also, Rena talked about this a couple weeks ago on the Stacks kind of event that happened with Axelar coming very soon as well. That's going to be really important to have that bridge on. So, yeah, there's a lot of money flowing in to this ecosystem, which is what you want for a vibrant ecosystem, right? So
totally.
Yeah, really cool stuff. Really cool to just have some recognition, and like you said, it certainly made the community happy.
Yeah, and I just think it's
some good news.
Yeah, it'll just keep getting better as more institutions see how easily you can move between Bitcoin and sBTC and all the different ways that you can earn yield on it. So good stuff for the Bitcoins flowing.
Yeah, definitely. Yeah, I always like the analogy of Bitcoin layer 1 is sort of like your savings account, and then layer 2 is your checking account where you can move stuff around and do payments and do DeFi and do things. So, being able to kind of freely move money from your checking account to your savings account and back certainly is very important to be able to do that. So having withdrawals, get unlocked next week. So you really can have sBTC in and out of BTC. It's just going to be really powerful. So
full functionality.
Lots to look forward to.
All right, to finish off, I thought I would add this one in here. I thought it was kind of funny. So John Carvalho recently has a Bitcoin proposal, and it got a number, 177. So his proposal is about renaming Satoshi units to Bitcoin instead. And the whole thing is about making Bitcoin nomenclature more accessible, especially as adoption increases. So as we know, 1 Bitcoin equals 100 million base units, and currently we call those Satoshis. So under his proposal, he's saying 1 Bitcoin should just be the smallest unit. So 1 Satoshi would just become 1 Bitcoin. And so I'm really interested to hear other people's thoughts on this. Some of the takes that I've seen so far is this is really about making sats the whole coins and getting rid of the whole, if I was to send a very small unit of Bitcoin, I would say I'm going to send you 0.00001. And it's not very friendly, not great for adoption. And then other people are saying well, the homage to Satoshi is nice. And as Bitcoin gains in fiat value, the amount of sats needed to purchase things will definitely drop. So in the future, using sats could be less cumbersome than it is now. But yeah, I just thought that this was kind of an interesting little side story. And it's kind of similar to some of the things that we see around Bitcoin DeFi. Should it just be called Bitcoin Finance, BTC Fi? Like, obviously, the wording is not the most important thing for adoption, but yeah, it just makes you think about like what makes the most sense.
Yeah, I mean, certainly we've seen for years now, right? You don't have to buy a whole Bitcoin, like
Yes.
that mindset.
Yeah,
Because some people still think that you have to buy a whole Bitcoin.
exactly.
So yeah, I think, changing the base unit to just, reflect the Satoshis or sats, whatever it's named, I think does make sense long term. It is super awkward right now to say, yeah, I'm going to send you 0.00001 BTC. It is a little awkward. It certainly would be nice to, yeah, say, I'm going to send you one Satoshi or whatever. I think I remember like a year or two ago, there was like another proposal I think it was based on, it wasn't like Satoshis, it was like 2 or 3 decimals, and it was like bits or something like that. And that was like another thing that people were trying to get on board. Because the idea was like once like Bitcoin hits like gold parity or something like that in market cap, then like 1 bit would be like the equivalent of like $1. And it was like
Okay.
trying to like
Match it up.
compare them.
Yeah.
In that way, which could be interesting. But yeah, I think certainly over time it's going to make sense to whatever we call it, but to like collectively adopt sats or that kind of base unit
Yeah,
a little bit more.
totally.
But I don't know how I feel about calling it Bitcoin. Too many things are Bitcoin.
Yeah,
Like
that's
the
what you're
network is
saying.
Bitcoin and the currency is Bitcoin. And yeah, I don't know. It's nice to be able to just call it sats. I feel like it's like, it's not too technical.
No, it's not. It is a nice word.
Yeah. So yeah, I don't know. I need to like, I guess, read his proposal to like really, hear the actual,
It
the
definitely
actual
makes you
reasoning
think.
behind it.
Yeah.
Yeah. And maybe I'll be swayed a little bit more, but I don't know. I don't know how I feel about it yet.
We'll take the weekend to read up on it.
Yeah. That'll be, some light reading of BIP proposals over the weekend. That's what I love to do on my weekends.
I wouldn't be surprised, Renan.
Yeah, you're right. That's true. Well, I think that wraps it up. Yeah, a lot to look forward to coming up soon. Bitcoin Vegas, I think we're starting to get excited for, and
Yeah.
starting to get some plans together for. We will definitely be there along with a lot of folks. And yeah, that's coming up. I think next week as well, a lot of folks are going to be in Dubai and Asia. There's a lot of conferences that are happening. So we won't be there, but we'll be tweeting about it, I'm sure. And yeah, just keeping an eye on some announcements maybe that are coming next week. We'll have to see what happens there. But yeah, I think that wraps it up for the week.
Yeah, awesome. Thanks everyone for tuning in. And I hope you guys all have a great weekend.
Yeah, thanks everybody.
Bye.
Bye. Thank you for listening. We record Good for Bitcoin live every Friday at 2 p.m. Eastern Time on X. Please follow us at Trust Machines Co. if you would like to listen and engage with us live. Visit us at trustmachines.co for all the latest Bitcoin news. We'll see you next week.